Welcome, everybody, to the 405 really stock market review. This is the number one chart of the day off of our trading desk. So I'm giving you one thing to focus on. ARMR Investing is an experience. We call it a virtual hedge fund experience. It's really the difference between an individual investing approach and a professional investing approach. Call it a hedge fund, call it a professional money manager, whatever you wish. I ran hedge funds for over a decade. I've been running private capital for over 30 years. So I'm sharing with you the process of how we run money here. Take the information that I share and make it your own. You're self-directing your portfolio. You're looking for information, then you have to determine how it fits into your risk tolerance and your goals. So I'm going to share with you today one chart off of the desk that had a profound impact on how we manage money and manage risk. The ARMR investing way is to use day trading, swing trading, and investing strategies in unison to manage a whole portfolio. So you probably heard me say that I, with my own personal capital, have a third of my capital day trading indexes, a third swing trading, and a third investing. And what separates investing and swing trading is really the risk management rules, where the stops are put, those types of things. So what I'm going to show you today is a day trading chart that leads to a swing trading chart. And when they both say the same thing, in this case, risk off is what they're saying, it affects how we manage our investing portfolio. Okay, so it's a three-step process. And here we go. If you find this helpful, as always, you can subscribe to this channel right here. Go ahead and share the channel, like the channel, do all those other fun things you can do. And if you have a question or a comment and you're watching this after the live feed, go ahead and drop it into the comment section. I'm always happy to answer throughout the week. So feel free. You can always subscribe if you'd wish to armorinvesting.com, ARMRinvesting.com. Take a look, see if it's for you. So here we go. This is the number one chart on the desk to focus on today, and it's the S&P. Let's look at SPY. Okay, SPY is the chart we're looking at. This is a daily chart, so you're looking at each bar is a day. But we're going to get to this chart in a second. Let's start with and I'll tell you what, I'll go to our day trading screen. Let's start with our 3-minute bar charts of the S&P and the NASDAQ. But we're going to focus here, I'm going to widen this for you, on the S&P today. Okay? And let's blow up this picture a little bit so you can see it. So every bar here is a 3-minute bar. Red is down, blue is up, of course. All the lines on this are drawn by the ARMR Price Movement Profiler, which is an algorithm we created that focuses on VWAP, volume weighted average price. That's the black dot. We have standard deviations above and below it in envelope form. We have an opening range high and low that comes in here. The green's high, the red's low. We have Fibonacci extensions above and below these opening ranges. And then, and perhaps most important, we have an average true range calculation. And what I'm going to share with you right now is the average true range signal that we use to day trade both long or short, and we use it to manage risk in a portfolio. I've highlighted for you these gray boxes, and they're showing you when the ATR, which is this blue line, when the ATR drops down on the day, as it did 1, 2, 3, 4, and 5, and then it just kept on going 6, 7, and 8 times. When it's doing that, okay, first of all, that is not a day to be looking long. So when we're trading the index with a third of my capital, I'm not long the index today because of the ARMR ATR trading signal. Okay, it was a sell signal today right from the get-go. Now, this yellow box right here is the most important I guess action of the day. So right up until that yellow box, it's just a normal negative day. Nothing to say about it. A third of my capital stays in cash because the ARMR ATR trigger is telling me to stay in cash or to get short. And I'm not shorting this market. So I'm just sitting in cash with that third of my capital. But I shared with everybody on our desk. So all subscribers that are watching this happen during the day, we're sharing information in the Slack room. They're watching a live feed just like you're watching one right now. And at 2:15, I said to all of you, I said, look, we are about to get a very negative signal on the market that we almost never get. When the average true range high breaks below the average true range low, there's a very high probability the market's going down aggressively into the close. So we're going to exit positions as fast as we can if that happens, which it happened shortly after 2:15. So how do we use day trading rules to manage risk? This is a high probability exit point. So from a day trading point of view, you could have shorted, but I'm not shorting. I'm using the information to manage my portfolio. I'm long in my swing trading and investing portfolio. When this happens at 2:15, I'm blowing everything out that I want to blow out, booking gains everywhere from the risk on entry point we had 2 months ago. Okay. So we layer on day trading and swing trading tools. So now let's go look at the swing trading aspect. This was a high probability exit point from a day trading point of view, but also a swing trading point of view. So now let's go look at the daily chart, which is what we use for swing trading. This is quite obviously, I think anybody, reading a simple candlestick charting textbook will say that this is clearly a risk off 3-bar reversal that actually ended up being an inside out engulfing day, right? So this down day engulfs the prior 2 days with its entire body and closes right on the lows. That's a classic sell signal. So let's make that yellow together. That's just simple swing trading using candlestick charting techniques. And you can go buy a book called Candle Power if you don't have it already. And it lays this out for you. It's a great guide for anybody trying to learn about candlestick charting. Okay. So that's step one. Step two is we go to our own algorithm. All right. So this is a 60-minute bar chart. So day trading for us is 3-minute bar charts, swing trading, 60-minute bar charts, investing is daily and weekly bar charts. Okay. So the swing trading entry point is here, which is June 1st. The risk monitor went green. The target was this green line right here for that swing entry point on the S&P. It was exceeded last week. That's okay. When we hit the target, it doesn't mean we sell anything. It just tells us, statistically speaking, we've just reached the average gain before the market corrects. And it could correct in time or price. So let me be clear. Today is not a call that we're going into a bear market. I'm not saying the market's going to crash. None of that. I'm not saying any of that. What we're saying is we've had a wonderful entry point from June 1st. We've made a lot of money. The day trading signal told us to raise cash and be very defensive. The swing trading strategies confirming that, because we've already captured statistically the maximum gains we're going to get before the market has to correct in some way, either time by going sideways up here and just chopping, or in price where it comes down. All right. And let's look at where it may go if it wants to come down. Okay. This is the daily chart again of the S&P. So here's the uptrend really going back all the way till October of last year. Okay. And we're just far away from that. And it could easily just mean revert back to the 50-day, which is the black line, or back to the uptrend. You could have a pullback all the way down to here, and the market would still be in a solid uptrend. So what we're doing up here is saying, okay, it's time to defend capital, raise cash, book profits, and let's see what happens next. Let's see what happens next. These are probabilities. Okay. These are probabilities. I'll talk to you Sunday night, 7 o'clock Eastern time, and we'll do our week in review. So we'll see what happens tomorrow, what the weekly chart looks like. Hey, is it possible tomorrow is a massive median bar reversal and the market's up huge at the end of the day and the end of the week? Totally possible. I've defended capital everywhere I think I needed to. I've raised a lot of cash. If the market reverses and goes higher, I'm happy to start putting capital back out. But statistically speaking, the market has just entered a consolidation phase in either time or price. And so I'd rather defend my capital while that's going on and look for the next risk on entry point to begin rebuilding exposure. All right. So 7 o'clock Sunday night, I'll see you then. We'll go over what happened for the week prior and how we intend to attack the week going forward. I hope you all found this helpful. Go ahead and subscribe to this channel to make sure you get these updates. Don't forget, share the video, like the video, do all those other fun things that help me out. And if you have a comment or a question, feel free to drop it in. Anybody who's watching right now has got a question for me, go ahead. The lines are open. Just put it in the comment section. I'm happy to answer anything you've got, because this is a very interesting day, and I thought I'd just come on and share it with you. Any questions you have, any thoughts you've got, I'll give you a second to go over it. In the meantime, just for fun, looks like Intel just blew out the number. Intel's up 6%. How much fun is that? When was the last time Intel had a good quarter? That's something worth doing some research on. No questions? Good. All right. So tomorrow, we'll see what we've got. And Sunday night, 7 o'clock, we'll go at it again. Bring your questions Sunday night, and we'll hash the whole thing out. You guys have a wonderful evening, and I'll see you on the flip side.